A major controversy is brewing in Washington over billions in taxpayer dollars. At the center, a federal program meant to help small businesses, now under fire from Senator Joni Ernst. On December 8, 2025, Ernst, chair of the Senate Committee on Small Business, demanded the Department of Transportation immediately pause a key contracting program. Her concern: waste, fraud, and abuse in the 8A sole source contracting program. This program lets agencies award contracts without competition, aiming to help disadvantaged businesses. But Ernst's investigation uncovered evidence of exploitation and corruption. She argues the lack of oversight has turned a good idea into a vehicle for fraud. Her letter to Transportation Secretary Sean Duffy highlights specific cases and a troubling pattern. The Senators' Committee has found alarming evidence of wrongdoing in the 8A program. Ernst's demand for a freeze is a major escalation, putting the Department of Transportation on notice. The core question: has a program designed to help become a magnet for fraud? A freeze could disrupt many projects, but Ernst insists it's necessary to stop further abuse. She's calling for a fix before another dollar is spent. This move sets the stage for a showdown over government spending and accountability. The public is watching to see how the administration responds to these serious allegations. Will the system be reformed, or will business as usual continue? The stakes for taxpayers and small businesses couldn't be higher. To understand the controversy, let's break down the 8A program, run by the Small Business Administration. It helps businesses owned by socially and economically disadvantaged individuals. The goal: level the playing field and create jobs in underserved communities. The program offers counseling, training, and, most importantly, access to federal contracts. The government sets aside a portion of contracts for 8A firms, giving them a shot against bigger competitors. Its most powerful feature: sole source contracts, awarded without a bidding process. This streamlines projects and gives small businesses a crucial advantage. But the lack of competition is also its Achilles heel. Critics warn it can attract fraud, as ineligible companies may slip through. Without open bidding, opportunities for bribery and backroom deals increase. The program relies on the honesty of both officials and businesses. When that trust is broken, the system is easily exploited. What was meant to empower the disadvantaged can become a source of corruption. The result: wasted taxpayer money in a tarnished program. The 8A program's greatest strength is also its greatest risk. Senator Ernst's letter spotlights a recent case: Echelon Services, LLC. In August 2023, Echelon, a subsidiary of the Hawaii Pacific Foundation, won a $5.6 million 8A contract. The issue: the parent company allegedly operates a second 8A firm, Echelon Accelerate JV, in the same business category. SBA rules prohibit a parent from owning two 8A subsidiaries in the same field, to prevent market domination. This rule ensures the program's benefits are spread, not concentrated. If one entity can skirt these rules, it undermines the program's purpose. Ernst uses this case to highlight a systemic loophole. How many others are exploiting similar gaps? The Echelon example raises tough questions about oversight and due diligence. It's not just about one contract. It's about the integrity of the entire system. Taxpayers could be losing millions, if not billions, to unchecked abuse. The 8A program's problems go beyond paperwork violations. In June 2025, the Department of Justice exposed a massive bribery scheme at USAID. A former contracting officer allegedly took bribes from 8A contractors, steering over $550 million in contracts their way. This wasn't a minor infraction. It was a conspiracy that corrupted the federal process. Contracts were awarded based on bribes, not merit. The case sent shockwaves through the contracting world, confirming critics' worst fears. The lack of competition in sole source contracts made this possible. One corrupt official could funnel huge sums with little scrutiny. The fallout was immediate. The SBA was forced to act. For Senator Ernst, this was proof the 8A program was in crisis. The issue was no longer theoretical, it was criminal. The scandal became a rallying cry for reform. The need for oversight had never been clearer. The scandals didn't stop at USAID. In October 2025, the Citizen Journalism Foundation published a bombshell report, a $100 billion federal contracting scam. At the center, ATI Government Solutions, accused of manipulating the system and misrepresenting its eligibility. ATI allegedly acted as a middleman, winning contracts and passing work to others, undermining the program's intent. The $100 billion figure reflects years of contracts across a network of companies. The report suggested a sophisticated, long-running operation siphoning off federal funds. This news intensified the crisis, demanding immediate government action. Combined with the USAID scandal, it painted a picture of widespread, organized fraud. For critics, this was the final straw. The system wasn't just flawed, it was broken. Oversight and enforcement were clearly failing. Calls for a complete overhaul grew louder. The scale of the 8A program is staggering. In 2024 alone, over $40 billion in contracts flowed through it. Even a small percentage lost to fraud means billions wasted. Sole source contracts, the focus of Ernst's demand, are especially vulnerable. The Department of Transportation awarded $111.9 million in sole source 8A contracts in 2024, half its total 8A spending. Across government, these no-bid contracts add up to billions. Without competition, it's hard to know if taxpayers get a fair deal. Fraud here isn't just a technicality. It's money stolen from public services. Every fraudulent contract means less for healthcare, education, and defense. It also erodes public trust and damages the reputation of honest small businesses. The real victims are the entrepreneurs who play by the rules but lose out to cheaters. Fraud creates suspicion around all 8A firms, making it harder for legitimate businesses to succeed. Oversight isn't just a bureaucratic box to check, it's essential to protect public funds. The cost of corruption is measured in lost opportunities and broken trust. That's why this fight matters to every taxpayer. The Biden administration's push for equity in contracting has come under scrutiny. In December 2021, it set a bold new goal: 15% of all federal contracts to small disadvantaged businesses, up from 5%. The aim was to close the racial wealth gap and build a more inclusive economy. Agencies were pressured to ramp up 8A awards. But critics, including Senator Ernst, warned that expanding the program without stronger oversight was risky. The rush to meet targets could lead to shortcuts and less scrutiny. Recent scandals suggest these warnings were justified. Tripling the money in a weak system only increased the opportunity for fraud. Ernst's letter links this policy shift to the current crisis. The administration's good intentions may have made the 8A program a bigger target for abuse. The less ambitious goals require robust safeguards. Otherwise, the door is left wide open for corruption. The scandals forced the government to act fast. The Trump administration and SBA Administrator Kelly Loeffler launched a crackdown. After the ATI report, the SBA immediately suspended ATI and 3 executives from federal contracting. Within weeks, 7 more companies linked to the scheme were suspended. The message fraud will not be tolerated. In response to the USAID bribery case, Loeffler ordered a full audit of the 8A program. She also warned contracting officers to be vigilant and rescinded USAID's authority to issue certain contracts. The Treasury Department joined in, launching a $9 billion audit of 8A awards. These actions represent one of the toughest responses to contracting fraud in years. The goal: restore integrity and protect taxpayer dollars. The government is signaling it's serious about cleaning up the system. But the challenge is enormous. The real test will be whether these reforms stick. The future of the 8A program hangs in the balance. The next steps are critical. Senator Ernst wants a decision on freezing 8A sole source contracts by December 22, 2025. The Department of Transportation faces intense pressure to act and investigate past contracts for fraud. If a freeze is imposed, other agencies may follow, disrupting projects and small businesses. Supporters argue a pause is needed to restore trust and fix the system. Meanwhile, sweeping audits by the SBA and Treasury are underway. Their findings could spark major legislative and regulatory changes. Congress may overhaul rules, tighten oversight, or increase penalties for fraud. The challenge: help disadvantaged businesses while closing loopholes. The debate will be fierce and politically charged. This crisis is a stark reminder. Even well-intentioned programs can go off the rails without strong oversight. For taxpayers and small businesses, the outcome will shape the future of federal contracting. The hope is for a system that truly serves its purpose and protects every public dollar.